Hi folks, this is Hyman, and last time I talked to you about an intraday trading strategy using the pound dollar on the 15-minute time frame using the start of the UK trading session at 3 a.m. Eastern. And today I want to switch gears because that was a strategy for early birds and for those that don't mind getting up early or that might be in a favorable time zone already. Here's another one where we kind of take an opposite approach. This one is in the evening. Um, we are on Aussie yen. We're on the 15-minute time frame. So each candle is 15 minutes in length, and we go back 10 days in time. And the Asian session, because both of these are Asian currencies, the Australia operates in the Asian session time zone, and so does the Japanese yen. And so that's when they're going to come alive a lot, when there's a lot of trading and activity going on in those sessions and their stock markets are open during those times. And so that is at 7 p.m. Eastern Standard Time or 1900, as you'll see on my chart on the markers. And so you simply do the same thing like we talked about with the pound, but you're doing it with the Aussie yen. When you're going into those trading sessions, there will be a lull before the trading session starts. Sometimes a little pop higher before the session starts. Here there was a pop higher where the trader could go long, and then and again, you know, when it goes long, you want to take some profits and move your stop to break even pretty soon afterwards, because a lot of times there's a chance of one side being a fake out, but yet still profit to be made from it. So it goes down through and then trades through the range, and then there's your bigger move to be had. On the next one, which is right here, we can move our range lines down to about right here, is where most of the trading happened in the range before the session kicked in. It never kicked to the upside at first, it kicks to the downside. So you can go short, take some partial profits by removing some of your lots, closing out some of those and moving your stop to break even. Then there is a reversal that happens, and then here's your strong move. So also keep in mind, if if you're conservative, you can wait and see if there is the little abbreviated move and come in on the opposing move outside of the other side of the range. If you're an aggressive trader, then there's profits to be had on both sides. And then also, some days you're only going to get one side move and not a fake out and a reversal. So there's more opportunity if you're willing to trade both sides. Now on this coming into this day, I would exclude this because this is going into the July 4th holiday in the United States, and so a lot of overseas markets will not trade heavily, even if there's a holiday that's not necessarily pertinent to them. Just because U.S. markets were closed. So a lot of traders tend to break around the world when U.S. holidays happen. So I would not do a trade setup when you got something like a 4th of July or something like that. So your next one is right here. Is your 7 p.m. Eastern Standard Time session. Your mundane range that happened before the session starts at 7 happens here. So so here you start into the session, so you're looking for the next breakout. You get a breakout here, which could produce profits. A hook back over because that through the range, and then your big move there. So just know, if you do get a fake out and then a come back through the move, that's usually going to be your big move, and where the biggest portion of your profits are going to be in that trading session. And so within just a few short hours of time around the start of the session, a little bit of time you'd want to be there a little bit before the session, and then 2-3 hours or so into the session, quite a bit of profit, or I guess I should say 3.5 or so hours into the session, quite a bit of profit can be made in 3 or 4 hours time just by trading this one simple strategy and doing this over and over again each and every day. So if you're a late night person, a night owl, you don't like the morning stuff, here is a trade setup for you. Or if you're just in a time zone that's more favorable to this type of trading, Then trade the beginning of the Asian session starting at 7 p.m. Eastern, which is 1900 on some of your charts, um, and use Aussie yen, which is one of the more volatile pairs, on the 15-minute time frame. Mark off your range before the session starts. And remember, you could have a bit of a breakout right before the session starts, just a little bit leading into it, or during or after the session, and any of those are tradable. You want to be very cautious on your first break because there's a huge likelihood that there could be a reversal. So the first break you get, you trade it, make some profit, take off some of your lots, and you can leave some lots on and then move your stop up. That way, if it keeps going, you keep making money. But if it reverses and stops you back out at break even on the latter part of your trade, you made money on the first part of your trade. It comes back through the range. You can take the opposing trade, get short in this instance, and follow the trade down, and do the same thing. Take some partial profits, move the stop to break even, and that'll allow you to continue to follow the pair and just periodically move your stop along the way to lock in and bookmark more and more profits. So hope this has helped you. Again, I gave you one last time that was early morning, 3 a.m. Eastern on the pound dollar, and this one is in the evening at 7 p.m. Eastern on the Aussie yen. So if you're really a go-getter, you could trade both of them and chill out in between times and not do any trading between then, and just wait for your 2 breakout sessions to start, and do your trading that way, and capture pips in the early session and then capture pips in the evening session and be done with your trading. Do it that way. But anyway, I hope this has helped you, and let me know what you think about it. Thanks so much, and bye-bye.